Happy Friday, guys. Good afternoon. This was a pretty fun day. Besides waking up late, it actually worked out in my favor for weekend trades. That was sort of the plan of attack for today. We had some pullbacks that led into close. We'll take a look at specifically for this idea with trading through lumber. If you looked at the morning, it was that 10 o'clock mark came in. There was not a trade to be made. I'm just going to use the very basic ETF to show this on the start. Go over to the 1 hour candle. Nothing here from the start. And this is again using going into 10 o'clock. You can see what needs to be done. But taking this trade right at close, I thought was pretty interesting. And so when you put it into perspective a little bit, this again allows us to, we're betting that this will return on its trend. In worst case scenario, we should be able to get out of this at Monday before the lumber futures start to trade anyway, or at least start to get the orders through at 10 o'clock. So if 9:30 comes in the lumber futures look to be aiming to be a little bit lower, then we can go ahead and take profit from 9:30 to 10 o'clock on those. So I like this entry here. I used specifically the leveraged and used DHI here. This came up a little bit earlier. Usually, again, the individual tickers allow for a little bit more of a percent gain. It's a little bit less dollar value compared to the ETFs, but this also started to show a little bit of the speculation going on Monday, which is the whole point of trading equities anyway, speculate on the other market. So this is what we did into the weekend. Just to quickly note on that trade, if we take a look at just the overall market on the average, throw this onto the 15, it was a pretty straightforward day, a break-even day. We opened quite a bit higher, which I talked about yesterday, which was an expectation to continue the move, some momentum. This shouldn't have caused any problems for anybody, unless, again, you somehow decided to buy at the very top here, and then you had to hold through the rest of the day. Even going into Monday, that's not the worst case scenario, but we bought down here for new positions. Again, long positions are still being held, but the buys down here this week on the trend line were pretty good, right? We bought last week down here, and again we bought this week. We finished off the week pretty well if you think about it. From really in this trend line, it's a little over 2% to 2% where we closed. That's a pretty nice gain from there, and then going into next week, we have that buffer, right? That baseline that we can then continue to push those positions through any sort of moves that happen. If you compare just the overall, the NASDAQ came up a little bit quicker from that low, but it's actually subdued a little bit towards the tail end of the week. Again, this is where you saw the Dow actually do the best overall this week and into the end of the week. Again, just due to that ratio of more orders being placed towards the value side, there's still really no change here, right? We're right at all-time high still. NASDAQ still has points to catch up, so it gains momentum quicker, but it also gets subdued a lot more towards the tail end. Everything still looks very good going into next week. I'm not sure if it's so much momentum goes forward to all-time high next week. I do think with sort of our rationale right now and the mindset that things are slower, that we're not going to do this again. I think this was too much, right? This breakout out of this consolidation on the Dow, or just really sideways trading, we put a lot of points on very quickly. You can't put 4% in 4 days on the Dow. That's ridiculous. A percent a day is just too much. I don't see us doing that, but hey, we've seen some interesting things. And with retail jumping back in, anything's really possible, but I don't see them going to the dirty Dow. I see them come over here to tech, which is, you saw the big boy list I posted last night. Data looking at some interesting, possibly some interesting ideas. I think that's where they're going to go. It's some more of the tech, sort of the tech heavier sort of areas, those ETFs that, again, things like ARK that we have seen nothing. We've seen absolutely nothing for a long time. It would not take very much. It would not take very much. Let me just use the overall ARK ETF. It would not take much for this to get moving, and you're kind of close, right? You're kind of close, and so again, this is terrible. It's terrible until proven otherwise. But this is the point at which I want to preempt anything that comes, and it literally costs nothing to do so. That this is the break. So that's what we're looking for next week. I think that's going to basically be the entire, sort of the entirety of the week. Things like net are on that list there, where we've seen moves come pretty quickly, and coming off the support, you can sort of feel that a lot of these are coming out of this. Again, we had this bear flag sort of idea. It's going to be one or the other, right? And it's hard to say that with the market continue to trend to the upside that these are going to get pegged back down. Some of them are still in a little bit of a spot that it looks a little, 50-50 on which way it moves. The volatility is pretty high. But the idea is to be watching and keep our eyes open for these, because it is in a territory, or at least it is in the territory where it could move very quickly, and we can get in before that momentum starts, and then we'll have people to sell to, right? Looking for the fools out there, right? I want to mention the Ford trade we talked about yesterday. In the morning, I was scrambling a little bit, talking about how EVs in this entire area are very sort of weak still, but Ford itself, again, we opened higher yesterday because there was just some of the news on Ford, but we've already been pricing Ford as an EV for a while, but it's actually not in the same position as the other EVs. It's actually at a high and been doing very well. And if you look at today, yeah, we kind of got nice confirmation from what I was talking about yesterday. But just to reiterate what I talked about yesterday, was that when I look at this chart, if we just excuse this candle for now, we were in a spot that we were still at a high. We were coming off this low, all of these gap downs very strongly. We don't have that bear flag that all the other charts have. Again, not to call a pattern before it is one. There it wasn't, but we didn't have that over here. This was a very nice sharp rally coming out of the low. The consolidations, albeit a gap down, were controlled very well. There was not some sort of instantaneous bounce back up. And so yesterday I talked about it, that this looked like a very nice spot to go sort of after, because you have that trade of breaking above the 1280 mark, that it's open skies, right? That's exactly what price did today. As soon as it got through that level, it was just open season, and price just went bid. These are big candles. This was almost 7% today. So this was a very nice sort of setup, and I think, again, it's important to be able to change our view a little bit, which a lot of the times I'll just be like, nope, that's a part of an area that I don't want to touch right now because I don't understand it. It's, again, important to go, okay, price is telling me something here, can use this, and it pays off, right? If we look, other things on the list, I'm going to mention this sort of area again, things like space. This was completely beat the shit. I still have not touched things like this, right? It gapped up 15%. It went up another 6 today. I mean, I have no idea what's going on over here. This could be an area that we can look for retail if they're jumping on things like this. That possibly there's some trades out there, but there were a few things like this out there this week that it's just too much. I'm not a I'm not a fan of going and buying things like this, especially when it's been so the price has been so poor for so long here. And so gonna leave that on the side. Now, aerospace and defense, this area has been very much up in the air about when are we getting out of this consolidation, and what exactly is it going to take to get some bid here. BA sort of gapped through everything today in terms of what we looked at. So we had a trend line coming through, and we had a level that we were taking a look at, gapped through it, closed above about 3% today. This sets up a very nice move for looking next week. You just take a look at sort of where we are. We're breaking this trend line, which would be the consolidation sort of upper trend line mark. This gapped everything, right? And that's a really bullish sign right there. So definitely all over that. Again, we're trading through the Dow anyway. BA is part of the Dow. When you look at that definitely looks very good. And again, a lot of the blue chips did very well again this week. And so it's nice when you see something else cap off the week like this. Again, everyone's really trading through these sort of the blue chip idea, through the value and derivative sort of approach. That's what's getting bought. And a lot of these, again, this is where we start to look at some of these that are a little beat up and looking at the lows, and you say, it's not hard to see people going and buying these, because, again, there's there is a sort of a point of retracing still that's there, and there's still the whole retracement back to the February high on a lot of value charts, right? Specifically value. Specifically travel. Travel is a part of value that's short-term volatile, but it's very far away from its February high because again, nothing's really that uh, close to being open as it was before, but we're getting there. So yeah, I think it's a nice week for that. I'm going to mention banks did very well again, coming off the low, which again proves the point of buying here. Energy was interesting coming towards the end of the day. I don't know if anyone saw that. Again, still proves the point of buying off the low. Still looks very good here. We had some interesting selling right here. I saw some different things happening there. I'm not exactly sure what that was. Again, you should never. This is one of those weird situations where possibly you bought at the low and then you were watching going into the weekend. You're up, you're up like 10, 15% or something, 20%. And then you see selling going into the weekend and you go, oh, I got to get out of this position, man. I don't know what's going to happen one day. And then after hours is now up 20 basis points. So it doesn't even matter. So those sort of weird things where you're looking intraday, but you took a trade that's not intraday, right? You took a trade that's long term, but you're using two 15-minute candles to make a decision. That's never going to be a good decision, right? That's not how we decide things, right? And so energy is still looking very good. The commodity side is going to be really hectic next week. When you look at across the entire board, gold keeps trending. This makes our gold trade is basically my best trade right now over the last I would say week and a half. Really, again, this candle here pushing us through, using again the ETFs, leverage ETFs. There's 100 different ways you can make these trades on the equity side, not using specifically gold, that gives you so much better leverage and allows you to protect your downside, sort of infinitely better than just trading gold, which is why I traded through that instead of just buying straight up gold. Same with a lot of other commodities, right, that we can trade through on the equity side. Commodities all over, we're all over the place. Again, I just mentioned the lumber trade right off the bat, but these moves coming through, again, this was up today, which is why buying it at the end of the day was very nice. But waiting until the end of the day was certainly the best mark. Again, some of you just jumped in. When we looked right from open, we opened high, but then that 10 o'clock trade came in and it came downwards. So you have to wait through that. Same with the gold trade. That 10 o'clock mark, you're using that hourly candle. If it's coming down from there, then you're waiting. This was a weekend trade put on the weekend. This thing's going to open up higher on Monday. That's what will happen. But if you look at the whole, removing that, if we look at the entire commodity space, almost everything came down off its high. This next week with commodities is really going to sort of set the tone of whether or not these super cycles continue on the commodity side, breaking back past the highs, at least continuing the trend. This causes a lot of interesting, again, dynamics that we've seen because the flows change. The sort of demand that equities have changes. We saw a lot of demand come in this week because commodities sold. And the biggest one that we need to talk about for this week is Bitcoin. We talked about this yesterday. We still got the trend lines there. I'm going to put in the 2 hour. About this yesterday that we had we minus 30%, right? Back on the 19th, came down 30%. It bounced off pretty quick, which I talked about it. I didn't want to see. I wanted to see it consolidate down at the low, which would indicate institutions are consolidating price. The fact that we bounced up quick was probably not the best thing, right? It went down to 30,000 and came back up to 43,000. So what we looked at yesterday was through here, we had this upper trend line that was not pointing towards the upside. What you want to see is the downtrend leads into either a consolidation that's a triangle, sort of like this. It would form like this, and then things would come through. That did not happen because it was sharp. And so in this case, what you would have wanted to see is that the next high that came in over here needed to be up here forming a bottom wedge instead. This would be a lot more bullish and actually allow for some sort of breakout. Now, this did not happen. So what you got was sort of the worst case scenario on both sides, which is that you had the very sharp higher lows, but then the lower highs over here really fucked it, right? And so too sharp, no consolidation. So this was the trend line from yesterday, just on these trend lines through here. This thing stayed right below the trend line resistance and got pegged down today. This going into the weekend is absolutely the worst case scenario. Weekend is the highest amount of spread in trading that usually happens, specifically with retail, and retail will sell the shit out of this coming into the weekend. Absolutely no doubt in my mind that this is going to get sold back down to the low. Whether it gets bought back on Monday, who knows? Still, it doesn't warrant a new entry for us, right? And it puts into perspective why I didn't enter here, why I didn't want to enter back in here, and how we could actually just look at the trend lines and go, that's not a good spot right now, right? Yesterday I was talking about it, that I would like to get back in at some point. Possibly this is the area around these 30,000 area, but we didn't consolidate anything. We're literally dicking around and causing some more damage, which you see here. This is what happens when you start to mix institutional trading with retail trading. Institutions may be just taking some off the book. Retail sees selling happen. Retail gets fear, starts selling more, but it's not them. It's not the fact that they're selling. There's always buying and selling happening. Someone has to sell for someone else to buy. It's that the spread gets very wide. Instead of it just being around the same price point, right? A 2% to 3% spread is what you like to see on Bitcoin. What we're seeing is 10, 20% spreads from high to low on some of these candles because, again, everyone's jumping in and selling for a fear reason and not for just to make a trade, right? Or just to invest, right? That's where you had trades that were, for when I was buying last year in the summer, I was buying to hold it for the long term. That's a long trade. I'm not looking to sell. What you're in now is a territory where people are actively trading. And so the time in which they're holding is a lot shorter. It's almost sometimes instantaneous. They buy and then sell. Now this is what's happening, right? You're getting into this area where now those buyers that were looking for the long term, like myself, some of you probably as well, now we're sitting and waiting. We're not buying every dip here. We're waiting because I would rather wait and lose some points to make sure that we're sort of starting the trend again than to just go try to catch every single one of these dips, knowing that I may have to sell again the next day, right? It's not that I can't do it. It's that I don't want to waste my time doing it if I can just wait. I didn't want to buy here knowing that I may have to sell immediately. I didn't want to buy here knowing I have to sell immediately, right? I may be able to get the same price in 2 weeks from now and know that I don't have to buy it and then possibly in 30 minutes sell it again, right? That's not how we do things, and that's not how the market wants to do things either. We don't buy things just to get stopped out 2 seconds later. That's a pain in the ass, right? And when you don't know that and there's uncertainty, this is when things start to get a little bit more, again, anxiousness creeps in and the fear sets and momentum just gets going. And now no one has any clue, right? This thing it could go anywhere, right? So oops, I'll keep the trend line in there for Monday when we see it. But I think this here, again, is the biggest question on everyone's mind. And I'm sure we're going to hear a whole shit ton come next week. China keeps talking about it. I'm sure our government will mention it because, again, this is sort of the worry about this is that this is a major sort of chunk of money, right? We're talking a $2 trillion market that shedded off 500 billion in about, I don't know, 3 hours. 500 billion in 3 hours is quite a hit, and this causes things that we don't really get to deal with. We don't have the liquidity to deal with these things, and this is why regulations are how they are. If Bitcoin was actually something that we use to spend things on, this would never be able to happen. So that's why it needs to stay sort of an equity and sort of only a speculative asset. We'll see where this goes. I'm really curious to see what happens and how many other people get fucked up by this weekend. I think if you just look on the trend line, you're probably coming down into this trend line. If you look on the 2 hour, like we just are, this is not the worst thing in the world, but it's pretty far down there. If it stayed on this, That's almost yeah, yeah. That's about 20,000. So yikes. But it'll be fun. I think it'll be interesting, and we'll see how people change their mind, and hey, maybe it holds through here. Some there might be some whales out there, you never know. Um I don't think I have much else to add on there. Uh, Everything again is staying very much on the bullish path, and uh, I guess the one thing I can mention from this week is again it's so important to be consistent and to continue to buy on the low. And again, we don't know if the low is actually the low in the moment, but that's the discipline that comes in. You have to buy it every time, right? You have to buy it every time, and sometimes it's going to not work out and it's going to hurt, but that's the only way we can do these things. As long as we have a bias that heads towards the upside, which has been 100% of time in human history, then we have to continue to buy. And what we change is again our time frame and what we're specifically buying, right? There has been nothing this week and the week before that has signaled anything else than just continue to buy. If next week presents us with a similar scenario, it's so important that we continue to do the same thing, right? We're not losing money for doing this, right? You should not be, no one's losing money for buying at a low and having it come to a high, right? Because if things start to turn, you always have the option to get out of it if you need to. But that's really not what's happening here, right? I'm going to mention Apple. This trade here, I bought this back over here on the 11th, held it through the 12th, didn't lose any value. When it came down here on the 19th, didn't lose any value from the trade from here. Today it came down again. I didn't sell here. I didn't sell through here. And it's still worth more than when I bought it here, right? That's when you buy something and don't look at it again. If you just continue to, again, if we're buying something for long term, buy it and don't look at it again. Don't look at the 15-minute candles, sleep in, do whatever you have to do to make sure that you're not in the way, right? I'm 100% in the market, and I've been for a while. I haven't been on cash in a long time, and the best thing to do is get out of my own way, right? As soon as I want to start making more trades and do things, I start making mistakes, right? You're in a trade, let it run. That's it. If it doesn't work out, it doesn't work, and you move to another one, right? But the hardest thing right now is to keep your hands off, your phone, off your fucking mouse, keyboard, whatever it is that you do to make your trades. Just keep out of it so that your trade can continue, right? And that's really where we are, and that's what the market is doing. That's literally what the market's doing. So we have to keep that going to next week, especially because we're going to get a little aggressive and little happy footed next week with trying to do some option trading with retail, right? That's a very small amount of money and has nothing to do with the other trades, right? So we can't let it sort of creep in and start to cause us to maybe get a little bit more intraday approached. No, those are two different things. By what degree would government issued digital currency just be another form of competing security? The whole thing with if governments start to release digital currency, I don't think it actually does anything. And the reason is that these cryptocurrencies are not actually currencies. We don't use them to buy anything. And they're going to always remain that way. Otherwise, they're going to get regulated out of their mind, right? Bitcoin will never be used to actually buy things. And the moment it does, the government will regulate it because currency needs to be regulated so that people are not getting fucked on pricing, right? If the United States released a digital currency, it would literally just be the dollar, like what you have in your bank account. You use your debit card, right? It would quite literally be the same thing. And I think like China's already proven that it's the exact same thing. It's just not denoted in bills. Right now, our system, right, when you put money in the bank or money is wired from a bank, everything is still being sent over to the Federal Reserve every night, right? And it has to have some sort of denomination with it that's an actual bill, like there's a cash somewhere, or it's at least going through that system that it takes, it has a check and balance on it. The digital currency would just remove that, and there would be no middleman between that. That's not how cryptocurrencies work at all. And so I think they're completely different. I do believe that crypto itself is not a currency. It's quite literally just a speculative asset. You can think of it as an equity. That's all it is. And it has to remain that way. It has to remain that way. Otherwise, it becomes regulated. That's exactly what China's talking about right now. We all know 100% that that's how our government would work. They would regulate it because, again, it causes too many problems. And it has not up to this point been used as a currency. And so again, those are two completely different things. It's like comparing stocks to currency right now, right? Or what if you could use shares you own to buy a pizza, right? That's never going to happen. So it's, again, those two things are definitely separate. I don't see how it doesn't really compete at all. And the only thing that we have there are flows again, right? But we already look at the dollar as a flow point. When the dollar sells, we look for it to go to equities, or we're looking for it to someone's. If the dollar's increasing, we look at it as someone's converting over to the dollar to buy U.S. equities, right? And so we'll just look at that as another form of a market that's not within the one that we're trading, that can affect flows, and maybe we'll watch it. But again, a digital dollar would just be the dollar anyway. So it would just be removing real physical cash from the supply. But if they did, I know 100% if the United States released a digital dollar, it would not take away from the money supply. The Fed can just the Fed already takes in bills anyway and gets rid of them and increases the money supply. So there would be no problem with taking cash out of the market to then convert it to digital. And it's only about 30% right now is physical cash that banks actually have. And so this already 70% is digital anyway, right? Everyone's using debit cards and fucking credit and everything else. So there shouldn't be any problem with that even. So I don't even expect a problem with the dollar or anything like that. Yeah. That's all. And I do, again, this whole thing with Bitcoin is, again, it's not digital currency in China that's affecting China's crypto regulation. It's all of the other issues, right? That if you just look at the start of crypto, a lot of it went through China with what was the one that got hacked and everyone lost everything, Mount whatever. That whole thing started in China, and then there's just a lot of issues that, again, money laundering, these sort of things. Yeah, China's all about monitoring, controlling people, exactly. They can't do so with Bitcoin. That's not how Bitcoin works. And so they want to have everyone on their currency. So exactly, they don't want to have a conversion there because, again, that's how that is. But that has, again, nothing to do with the currency angle, and it does affect the fucking price though, because geez, that came down very quickly, and as it should, right? Which I think is the funniest thing, because we all thought about, like, 6 months ago, what if the U.S. government tries to regulate crypto? And the funniest thing is that we didn't go, well, what if China tries to regulate crypto? Why didn't we ask that question, right? Well, that's why I've changed my bias a little bit, right? We have a lot of there's a lot of questions that were not asked and still have not been asked about crypto. And that's a problem, right? And that's where, when I sold everything, over a month ago now, just thinking, like, all night, like, this is silly. Like, what do we have people saying things that are untrue, completely false, right? Oh, it's good for the environment, right? Things like that really start to creep in. And if you look at, I don't want to use like a crisis angle, but if you look at every financial crisis and you look at how fraud works and everything else, not to take a line from The Big Short, but that's where I'm going with it, is that every single time there's been a crisis or a bubble, during the tail end of that bubble at the peak, what you have is a lot of fraud. But fraud really should be used as a speculative word. It's speculation that causes fraud, because it's the scamming angle of everyone speculating, and you convert a normal person that may not be a market participant and you turn them into a speculator. If you look at housing, right now, what is everyone doing? Everyone's racing to buy houses, but Jesus, Every time I put a bid in to buy a house, someone else bids over me. So do you know what normal home, people that are trying to buy homes become? They're no longer becoming a home sort of buyer. They're a speculator. They're literally becoming a speculator on that market, and things start to become again a little bit more blurry, and that's when fraud comes in and you get scamming. What happened with crypto? You had, I think the number right now is like there's over $2 billion worth of people, or $2 billion worth of money, dollars that have been made from Elon scamming impersonators that have scammed people of Bitcoin, right? That that's like a level of scamming and fraud that runs rampant because again things turn into speculation and turn into this sort of a situation that is not, there's no way to control it, and this is what happens. It becomes a little hot, and we're in that weird spot where you have a lot of things that are not true being told, and um, it's too many questions that have not been asked and too many that won't be answered. So yeah, we'll see how all that works, but thankfully it won't affect us with anything. So yeah, unless again you're in Bitcoin still, but I'm pretty sure everyone's you either have a very long-term plan and you don't care, or yeah, you kind of just got the hell out of there like I did. So yeah, already out. Yeah, it's one of my favorite exits. Oh, that's gone. One of my favorite exits is just to, I do this a lot where I'll stay up all night and then I haven't slept in a long time, and then I'll go, okay, I'm gonna make a big decision right now. It's worked out so far, so I'm gonna stick with it. But that's all I got, folks. Yeah, sorry for no morning again. That's how it works. Stayed up all night, looking at shit, but it's paid off. It looks good. So I'll see you guys. I'll see you guys on Monday. There will be more charts. I already have some weekly charts, so that's exciting. Enjoy your weekend, and I'll see you Monday. Enjoy.